problem. So I'm joined here by New Forest CEO David Brand.
Hi, everyone.
And my name is MaryKate Bullen. I lead New Forest's corporate sustainability program. I'm just going to back up to show you a couple of the slides that we just talked to briefly, and we'll cut back to the meat of it. The overview for today, we're going to be first going through a quick introduction to the webinar format and how we'll be interacting today. I'll then hand over to Dave to do a quick overview of the New Forest business and then give a brief chat around the evolution of sustainable forestry investing and what that means for how and why we report on sustainability at New Forest. We'll then pause for Q&A, and then I'll have a brief presentation on sustainability reporting and impact measurement and how we've been advancing that through our work at New Forest, again followed by a Q&A. To support the Q&A, just wanted to highlight that everybody should be able to use the chat function of the Zoom in order to send me a private message. So you can go ahead and send questions throughout the presentation to me, and we can then read out those questions when we pause for Q&A, or we can also open up and unmute individuals to ask questions at the end. But so that we know that we can unmute you, we do need you to at least send a message saying that you've got a question, and then we can call on you. The reason we're doing it this way is just because there are quite a number of folks on the line this morning, and so if we keep everyone unmuted, it should be a little bit easier for everyone to hear as we go along. So with that, we'll get to the good stuff, and I'll hand over to David Brand.
Okay, thanks very much, Mary-Kate, and let me start by congratulating you on another great sustainability report that you've put together this year with many of the people across our company and many of our service providers and stakeholders in our forestry investments. Just a quick introduction for those of you who maybe don't know New Forest very well. We're an investment management business. Our head office is in Sydney, Australia. We also have regional offices in San Francisco and Singapore. We manage forests across about 6 countries: Australia, New Zealand, Indonesia, Malaysia, Laos, and the United States. We currently manage about 5.2 billion Aussie in AUM, which depending on the exchange rate is maybe about 3.7 billion US. Most of our clients, about 70%, are defined benefit pension plans, so institutional investors. Most of our clients are European and Canadian, a couple of US. We basically operate the company with 3 investment strategies. An Australia, New Zealand investment strategy focused on high quality timber plantations, eucalyptus and pine, which serve both domestic markets and export to Europe. An Asian strategy that looks at high quality hardwood timbers and sustainable rubber plantations in Asia that support the growing demand from the rising middle class of Asia for wood products. And in the US, we have a strategy that looks at investing in forests that have high climate mitigation potential and operating those forests to optimize between climate benefits and timber harvest. So our company has tried over the years to be very much aligned with our clients in terms of thinking about sustainability. What are the outcomes, the aspirations that we're seeking to create with our investment programs? And I guess where that starts really is with a consideration of where are we heading in terms of our society, in terms of our forestry sector. What is the role of the forest sector in sustainability, and what is our investment strategy that will help us move in the right direction? And we try to think about where the forestry sector has come from, where it may need to go, what are the big driving forces, and that's what I thought I would talk about first, and then I'll hand over to Mary-Kate to look at how she has built out with our sustainability team a set of measurable features around sustainability performance. So just for those of you maybe who haven't had a lot of background in the forestry asset class, I'm sure many of you are pretty well up the learning curve, but forestry, it's a relatively small asset class at the moment. Our estimate is that there's been about $100 billion invested, from sort of private direct investments, but also listed timber REITs. For most investors, forestry is seen as a real asset, similar to real estate, infrastructure, or farmland. What's somewhat unique about forestry is that it its return is essentially produced by a process of biological growth. In other words, as a tree gets bigger, it gets more valuable. And forests don't tend to have a maturity point. So what that means is if the markets are poor, you can grow the tree on a bit longer. And when the markets recover, you can harvest the tree for income. So you have this kind of optionality between income and capital appreciation. And what that tends to mean is that the volatility of the underlying valuation of the asset is lower than the volatility of the markets that it's exposed to. And so you tend to get an inherently good risk return profile and an inherently low correlation with other assets. So that's the kind of commercial or investment fundamentals. But what's emerging also is that forests are very important to our human society. They are increasingly recognized as central to action on climate change, and I'll come back to that. Over half the world's biodiversity is based on forests. Most of the world's fresh water is regulated by forests, and increasingly, as we see our population rise towards 10 billion people and the economic pressure on the world increases, those assets become almost a form of natural infrastructure for the world, and that's really what I will come back to in my talk today. Forests, in terms of the total world forest cover, it's about 31% of the world, about 4 billion hectares, but really a tiny sliver of that is the actual investable timberland today. And much of that, probably half, is in the United States, Australia, New Zealand, Asia, Africa, Latin America have high quality plantations that also are potentially investable. Many of them are not currently in investment owners, but are owned by corporations or governments. Europe, there's a substantial forestry base, but again, much of that has not been moved into investment ownership, but is owned by individuals, families, and businesses. I guess we have seen over the last couple of years, talking to clients, somewhat of a frustration about forestry, and that the returns seem to have declined, that there's been a sense that the asset class has been somewhat overbought, and people are searching for where are the opportunities for forestry to be a better performing asset in a portfolio. And so I guess our view is that there is an exciting future for forestry investment, and there's going to be a set of trends that will drive how the forestry sector evolves over time. And these are, firstly, the inexorable rise of demand in Asia for all types of materials, but particularly we think for sustainable materials. The second is an evolution in wood supply from harvesting of extensive natural forests into more intensified plantation-based supply. The third is fundamental changes in the nature of forestry markets. We've seen the decline of newsprint and printing and writing paper, but the rise of many other new materials and engineered building systems. Fourth is sustainability becoming central to the forestry asset class, and even a driving opportunity for how we'll invest in the future. And last is the rising role of investment and the nature of how investment may evolve in the forestry sector. So if we start with the first of these, the rising demand from Asia. If I go back, when I started out in forestry in the late 70s, early 1980s, there was really three big timber markets. There was Europe, which was largely a market that was serviced by Scandinavia, Central Europe, with hardwoods imported from Africa. You had North America that was largely self-sufficient with timber from Canada and the United States. And then you had Japan, which was a large importer of wood, both softwood from Western North America, but also hardwood from Southeast Asia. China was effectively self-sufficient, or even in some cases a small exporter of timber, but that all changed in 2000, and we've had this enormous increase in wood demand in China. China today is the largest importer of wood products in the world. And behind that, of course, is the rising economic growth of India, Indonesia, Thailand, Philippines, Vietnam. There are billions of people in Asia who are aspiring to middle-class lifestyle, and that is driving a restructuring in timber markets in the world. In some ways, if you look at the rise of China, the only way that the world was able to accommodate that was that we had the financial crisis in 2008, 2009, where, in a sense, excess wood supply was available to support that rising demand from China. But now markets have in some ways permanently restructured around trying to service that demand. But as the demand continues to rise now towards 250 million cubic meters of industrial roundwood, it's becoming increasingly difficult to service that from existing wood supply. And certainly over the last 2 or 3 years, we've seen, we normally had a kind of a cyclical softwood market in China. It hasn't had a down cycle now for about 4 years. We have seen a significant step up in prices for hardwood wood fiber over the last year, as effectively you're economically going along a supply price curve, and as the demand rises, you're forced to seek out ever more expensive supply, and that's where the price in the market settles. And so that leads me in some ways to my next major trend, which is where will future wood supply come from? And the way the world's wood supply is currently organized has been sort of 1/3 from Europe, 1/3 from North America, 1/3 from the rest of the world. About 1.7, 1.8 billion cubic meters of timber are produced each year. About 1 billion of that comes from natural or semi-natural forests, and about 700 million comes from intensively managed timber plantations. All the incremental growth in supply, in our opinion, or my opinion, is going to come from these timber plantations, principally in the southern hemisphere and tropics. And when we try to think about, well, how much wood do we need? If we had a kind of a business as usual scenario, you might have about 1.5% per annum increase in timber demand, and you could probably manage that just from steadily increasing the productivity of your existing plantation base. If we went up to, say, a 2.5% per annum increase in demand, you might have the ability to service that with some expansion of the plantation area. But when we think about a world where wood products, biomass, biofuels, and other kind of wood-based materials start to actually substitute for more environmentally damaging materials, organizations like WWF have suggested even a 4% per annum growth in wood supply will be needed. And that would drive us up towards 8 billion cubic meters of wood demand, which would require, I think, a complete rethinking of the supply of biomass, and probably an emphasis on hyper-productive systems, even bamboo or other types of materials that could be just grown at high levels of productivity, reformed into all different types of materials. So our view is that intensification is central to creating a supply-demand balance. And the third big issue is that the nature of the markets themselves are changing. And when we look at the wood markets today, they're differentiating, but we basically have fiber-based markets, which is a lot of packaging materials, fillings, sanitary materials, and now even things like fabrics like rayon, which are made from cellulose. We're also seeing new engineered wood materials like CLT or laminated veneered lumber that can build multi-story buildings out of wood that substitute for concrete and steel. All kinds of plastics, resins, chemicals that can be made through biorefineries that are increasingly being developed with a lot of leadership, I would say, in Scandinavia. Then we have fuels and energy. So these markets, if you think about the substitution of wood products for concrete and steel, or biomass for other conventional fossil energy, these are enormous markets. The scale of this is almost daunting. But again, when we think about a human society, with a 10 billion population and potentially a 200 or 300 trillion dollar gross world product this century, we need to think about sustainability as central to everything. And so when we look at our first three trends, we're thinking about how do we supply this burgeoning economic growth in Asia? How do we intensify and expand the production of wood, likely from plantations in the southern hemisphere and tropics? And third, how do we create this kind of homogeneous material that can then be reformed into all of these different end uses? And then I guess the fourth big trend really is around sustainability itself. I've been in forestry long enough that I know from the 1980s, the origin of conflict over old growth logging. We had, the largest incidents of civil disobedience in the history of Canada over a forestry logging event in Vancouver Island, flowing into the Earth Summit. In fact, there was an aspiration not just to have a climate change convention and a biodiversity convention, but there was an aspiration to have a forest convention, and that actually failed and broke down. And so coming out of the Earth Summit, there was still a lot of polarization of the view of stakeholders about forestry, and we saw the launch of the Forest Stewardship Council in 1993 in Toronto, with the idea of certifying those forests that were sustainably managed. There's been a lot of sophistication now in terms of thinking about what is sustainable forest management and what are the kind of performance measures and reporting that's needed. But fundamentally, the problem that we have with forests is that they're mispriced. And if you really thought about, these values of storing 1.6 trillion tons of carbon dioxide equivalent and regulating the fresh water and 50% of the biodiversity of the world, I mean, forests would be far more valuable. A few months ago, I sat down and tried to just do a couple of different measures of what would it cost if the world's forest cover was for sale, what would it cost to buy it? And I could get to a figure of around 800 billion US dollars to buy the world's forest cover. And the real estate value of the borough of Manhattan is 1.75 trillion, or London is 2.2 trillion. So we're fundamentally mispricing these assets that are effectively the natural infrastructure of the world. And when we look at the IPCC report that came out in September last year, and the recent reports from the Nature Conservancy, WWF, people are talking for land use, forests, agriculture need to present something like 30 to 35% of the climate change mitigation solution over the next couple of decades. And that is going to require an enormous mobilization of investment, and that's going to require economic fundamentals to change, and we need to have pricing of these so-called ecosystem services. And so we think when we look out 10, 15, 20 years to the future, we're going to need it to, in a sense, reinvent this asset class so that it becomes not only a source of sustainable materials for a society that's trying to be functionally based on a circular economy, a sustainable economy, a renewable economy, but also an infrastructure that provides ecosystem services. So that is, to us, where we're heading. And when I think about then what that means for the future of the forestry asset class, I think, today we have an investable universe that we call $200 billion possibly. And I think we need to have an asset class that looks more like $1 trillion over the next 20 or 30 years. And that means we're going to need to, for example, triple the plantation base of Latin America, Australia, New Zealand. We're going to need to incorporate the price of carbon into all of those extensive forests in the USA, Canada, Europe, and look at how that can be used to drive building up carbon stocks and biodiversity conservation in those extensive natural forests. And we're going to need to look at ways that we can restore, enhance, conserve forests in the tropics. And part of that is fundamentally about supporting a new rural economy. And the the environmental side and the social side of this have to be integrated. And when you look at some of the investments that we've made in Asia, it's almost central to having a linkage with the community, whether that's through a community outgrower scheme, a agroforestry program, or some sort of shared benefits structure. Because if we are going to stabilize the tropical forests, emerging markets forests, there's going to need to be a pathway to economic development that's linked with that conservation. And it needs to be integrated in the investment strategies that we pursue. And that's where we're now starting to look at quite fresh ideas around things like blended finance that can bring together impact investment with institutional capital. We may end up with investment structures that have 2 or 3 categories, including carbon offset buyers from the energy sector, impact investors who are looking at social and environmental additional outcomes or impacts, and then the conventional investors that are looking for solid risk-adjusted returns. And that's, you know, what we're thinking about as a business is what does that look like? We certainly have in our US fund, we're effectively driving a return that comes from both commercial timber as well as climate finance. In Asia, we're looking at a business model that integrates together impact and a conventional investment. In Australia and New Zealand, we're really trying to build a business of scale that can deliver FSC certified timber into the burgeoning Asian markets. So I guess across all that, the question is, are we winning or losing? What is the way that we judge our progress? And so we've spent a lot of time thinking about how do we actually define performance? What is it we're trying to achieve? And I'm going to turn over here, I'm going to take a break there, and then we'll turn to MaryKate and let her talk about our specific implementation of our sustainability measurements.
Great, thanks so much, Dave. We did have a question come in from the UK, which is, does the expected increase in intensive plantations in the future open up concerns about land use change requirements in order to meet this?
Yeah. So I think the first thing is what we need to think about is sustainable landscapes that incorporate and balance conservation and production. And in no circumstances should we be clearing any natural vegetation to put in place intensification. What we need is to look at largely degraded land or low intensity use land that can be reforested and can be balanced with protection. I mean, if you look at our assets, I think worldwide about 30% are under conservation management and about 70% are under intensive timber plantations. So you can embed these things together and deliver both outcomes. And I think that's increasingly going to be driven by a kind of an economic imperative as well as an environmental and social imperative.
Great, that's great. Thank you, Dave. Just pause here for another second to see if anybody has another question that they would like to ask. I'm not seeing anything come through on the chat box, so I'm going to briefly unmute the whole group. So if anyone's bold enough, feel free to pipe up with a question. All right. If there are no questions then, oh, I see one has just come in, so I'll put the mute back on for a second. And then I'll have to unmute myself again, so give us 10 seconds here. So the next question was just agreeing that forests are undervalued. What is the outlook for the time scale on which we can anticipate that payments for ecosystems and their services might be realized? Great question.
Yeah. Well, it's interesting. I remember 20 years ago, people were asking, well, what will the future look like? Will we have a kind of a set of internationally agreed price signals for climate finance or biodiversity conservation, or we'll have something more like a Middle Eastern bazaar of, you know, different market conditions? And we have unfortunately drifted into the latter basket, I would say. So we do have, I think, a well-run market in California that prices forest conservation and improve forest management, and that's been operating now since 2011. I think over $1 billion of forest-based offsets have been sold, and there'll probably be another 2 or 3 billion in demand in the coming years. And I think someone has told me that up to 8% of the commercial forests of the US have now been listed into that scheme. So it shows how quickly people will respond to a price signal. New Zealand, there's a carbon price of about 26 New Zealand dollars, which is about 1750 US, and that is now attracting investment into greenfield forestry. In fact, I think we've been doing some of our first greenfield plantation projects in New Zealand in several years. Australia, there's a kind of a carbon market where the government is a direct buyer of climate benefits, and that can also support forestry. There are some voluntary markets, but really I think now what we're looking at is a system where we're going to need to really get this to scale, and it needs to get to scale. And I think that if it gets to a scale and a price where you've got a price signal of between $20 and $40, it will significantly change land use, because the economic signals will quickly change in terms of it will become more and more economically irrational to deforest land. It will become increasingly attractive to reforest and restore ecosystems, and it will become commercially driven. And that's, it's very difficult to try to change behavior without an economic driver. And that's, I think, what we've learned. While you can certainly create a lot of scrutiny on people and try to put certification systems in place, it's ultimately a need for that fundamental economic and value of forests to change.
Great. Thanks so much, Dave. Great. We're getting a couple more questions, so we'll just take another few minutes to answer those. Question from Louise Rocharte, who is the leader of the Forest Solutions Group from the World Business Council for Sustainable Development. He'd like to know, what do you think about the competition between wood utilization as energy versus other uses?
Well, I suppose that if you've got an integrated processing system, I mean, I'll just step back and say that one of the things that we're going to have to do is make very close to 100% utilization of whatever timber we grow. And we can't have 20, 30% waste streams. And if you look at sawmills, often they're just burning off the waste in systems to get rid of it. I think that everything needs to be utilized. And if there's a last piece of that waste that can go into biomass energy, I think that's quite appropriate, especially if it's substituting for fossil-based energy. I don't really see dedicated biomass energy plantations. I think that it will remain a byproduct, but certainly I think there's going to be this kind of almost like an ecosystem of different industries around forests. It starts with your sort of primary building materials and the fiber-based materials and your biochemical players, and then ultimately at the end is probably an energy product.
Great, thanks, Dave. And one last question before we move on to the half of our presentation about the details of the reporting. Question asking, what will it take for US institutional investors to begin to recognize those biodiversity and bioinfrastructure values of forests, and to shift toward a long-term perception of the asset class's value and away from traditional value generators like timber production and underlying land value?
Well, I think, as I said a minute ago, it's the fundamentals of economics, and most people are going to work in the morning and serving clients who are pensioners or medical benefits or other types of long-term liabilities, and you need to have the certainty to be able to invest and feel confident that these markets will operate and that you will be able to generate a return. I mean, at this point where we look at carbon markets in the US, for example, we treat it almost entirely as an upside because we don't want to expose our clients to downside risk from carbon markets, which have in some cases been volatile. But that being said, when a market is there and it's creating higher returns, it does ultimately attract capital. And and particularly as the track record of these markets becomes predictable, I think we will see significant shifts in how the forestry sector evolves. And I think the alternative, which is sticking with simply managing timber for managing forests for timber alone, is going to be outcompeted by these more sophisticated models that will integrate wood production with conservation outcomes.
Great, thanks, Dave. I think with that, it's a good time to move on to the second half of our webinar today, which is where we're going to take a deeper dive into that aspect that you ended with, Dave, on how do we know if we're winning or losing, and what does the path look like towards this more ambitious natural infrastructure asset class of forestry. So with that, just a quick overview of New Forest's background in terms of our commitment to sustainability reporting. It's nothing new to us. We first started reporting internally in 2011, and since 2012, we've been reporting publicly as part of our commitment to transparency and accountability, really centered in our responsible investment policy and commitments as a business. The focus that we've tried to bring to this always is to be consistent, to be transparent, and to be focusing on continual improvement in the way that we're measuring, monitoring, and reporting the impacts of our investment. We do this because, it's not just something that we want to share externally with certain stakeholders, but because there's a fundamental belief internally that the better understanding we have of these impacts will help us to improve to improve the management of those impacts. And in turn, we seek to then enhance our investment performance while managing those impacts. It's also important to us that we're considering, where do we sit in the greater universe of responsible investing as a business with an influence in the forest sector, et cetera. And so, we're very happy to have seen that, particularly over the past few years, there's been a real ramp up in others who are also trying to better define how investors and businesses measure, report, and manage the social and environmental impacts of the way they do business. So we're trying to keep the pace with programs like the IRIS Plus from the GIN, which will be launching that IRIS Plus framework within the next week. The Impact Management Project, which has kind of been a watershed moment in terms of bringing force of a broad group of investors behind a common view of impact management. And also, it's been really important to us to use sustainability reporting and our ESG disclosures as a way to engage with our clients, to help them understand how and why we manage their assets the way we do, and what those assets are achieving in the world, in addition to the financial returns that we're bringing back to them as investors. So that's brought us to our 2018 sustainability report. This is the first year we're trying something a little bit new. In addition to just this webinar, we've actually put together 2 different formats for people to engage with our reporting. The first is a traditional PDF for those who like to sit down and read something cover to cover, or to flip through a hard copy. It's something good that you can either print, or if you see us around at an event or a meeting, we're happy to share the hard copies we've got with you. Very traditional way to engage. But we've also created a new interactive PDF, which we'll share with you in a few minutes, that helps you to kind of explore and navigate in a less linear way about how our ESG management and impact management programs work. The main things covered in the report, it is important that we give a background on our business. We want to overview who New Forest is as a fund manager, to explain the background of our 3 regional investment programs, to explain the foundations of how we work as a responsible business, including the governance systems we have and the oversight and accountability that brings, and also the responsible investment commitment we have, which has been central to New Forest for a decade now, to really operate at what we view as best practice responsible investment for forestry. Now, the meat of it, and the part that I think brings things to life, is where we get to the ESG and impact management. Again, it's important that we provide context. Our report is a bit meaty and lengthy, but that's because we're privileged to operate in some very diverse and interesting contexts across our 3 regional investment programs. And we want to make sure that we're providing the full setting for people to engage with the impacts that we discuss. And to bring added color to those, something that we're always very proud of in our sustainability reports are the case studies and highlights. And that's where particularly exciting to me, getting to bring this together in the reporting context, where I get to engage with all of the teams across our business, and particularly with our portfolio management and operations teams, to find, what are they particularly proud of, what achievements have they seen in the assets they're managing over the past year, and to share those with a broader audience. So I'll dive now into some of the things that you will find in the report when you have a chance to take a look through it. The first of those is the corporate sustainability highlights, and this again goes to our business and what we're doing as a fund manager. Our corporate sustainability program has been focused on responsible business practices and seeking to implement a best-in-class approach for responsible investment in forestry. We are very happy in early 2018 to achieve B Corp certification, which involves an independent verification by the nonprofit B Lab and shows that we meet high expectations for social and environmental performance as a business. This is something that has a standard framework, and I kind of liken it to the fact that, we've been certifying our forestry assets using Forest Stewardship Council certification since we started managing assets in 2005. And this is kind of like a certification for us as a business. Similarly, shows that we're aligned to responsible practices. We have been a Principles for Responsible Investment signatory since 2010 and have maintained an A+ rating since we began our annual assessments. That's something we're very proud of. And if you'd like to learn more about our PRI ratings and assessment, we've got our reports available on our website as well as in the PRI data portal. And another highlight from 2018 that is very interesting for us is we've really ramped up our participation in a few key external groups, including investor climate groups like the Investor Group on Climate Change, the Asia Investor Group on Climate Change, and Ceres here in the US. We also joined the World Business Council on Sustainable Development and its network partner BCSD Australia. For us, this is part of a really important commitment to collaborating with others in both the investment industry and in the sustainable business industries so that we can collectively accelerate that transition toward a more sustainable future. One of the things that has been an interesting outcome of some of that engagement is really getting to understand how our peers are also looking at the Sustainable Development Goals. New Forest in our 2017 sustainability report put forward these 4 SDGs, which are 8, 12, 13, and 15, as the key areas in which we seek to create positive outcomes that contribute to the SDGs. I wanted just to highlight what they are and how they relate to our business. These are the 4 that every one of our investment strategies touches upon, while there's also, of course, others that we're aligned to as well. Decent work and economic growth. To us, one of the greatest contributions we can make to this is through decoupling economic growth from environmental degradation by investing in sustainable forest management and businesses that provide strong jobs and sustainable products. We're hoping to increase that economic development while maintaining and preserving environmental values rather than degrading them. We're also doing things like working to end modern slavery and supply chains, eliminate child labor, and ensure that all of the jobs in our network have strong workers' rights as ensured by things like the IFC performance standards and the Forest Stewardship Council principles and criteria. On 12, that is the responsible consumption and production, again goes to the point of generating materials for the low carbon economy from sustainable forest management. Climate action, something that we're very proud of at New Forest, and particularly in the amount of climate finance that we're mobilizing toward low carbon investments in the forest sector, and the fact that we're designing investment strategies that explicitly seek out climate targets in the forest sector. And life on land, which is really what we're all about at New Forest. That's where forests feature most strongly in the SDGs, and where factors like biodiversity, ecosystem services, and habitat protection come into the SDGs. So with this year's report, we launched our first SDG dashboard. This is something I'd be really interested to hear feedback from a broader stakeholder group, but we wanted to use some of the ways we measure and report on our impact and put it into the language of the SDGs in ways that are linked to some of the SDG targets. I won't go through the details of these right now, but some of the highlights would be things like more than 5,300 people involved as workers on our assets. And all of those are, again, in positions that have workers' rights ensured through using the best-in-class standards for FSC and the IFC performance standards in emerging markets. It's things like the fact that we've produced 6.7 million meters cubed of timber, of certified timber, and that 99% of all the timber produced from our investments in 2018 was certified. These are the types of impacts that we think are meaningful, and that we believe if all forestry investors and businesses in the forest sector were reporting on and seeking out these types of impacts, we would see a shift in the sector where the sector is meaningfully contributing to the SDGs. Another real highlight for us is that we've got more than 560,000 hectares of forest and forest certification. The vast majority of that was not certified at acquisition, so that's been a meaningful improvement that's come through the responsible investment practices we bring. Moving on, from the SDGs, which are really a global framework for countries, New Forest is happy to report on those and try and connect what we're doing as an investment business to those. But when it comes to how we think about managing our assets for improved performance, both in a financial sense as well as environmentally and socially, we really have felt the need to provide something more specific and a bit bespoke that we think will really help us to monitor the specific ESG performance of our assets. So to do that, starting in 2015, we undertook a process to really define our most material ESG impacts. We created a framework we called Sustainable Landscape Investment, which has the 6 themes that are shown on this slide here that include productivity, land use planning, risk management, governance, shared prosperity, and ecosystem services. Now, we feel that those are really the 6 themes through which New Forest can influence the management of our assets. And we've been working since then to create specific indicators under each of them that help us to measure that. That means we've created more than 70 metrics which are intended to support our sustainability performance analysis, benchmarking, and provide information on the relative performance of our assets under management and inform future action and management strategies. They're also a major part of the sustainability reporting that we provide now to our clients and that which we provide publicly and which we're talking about today. This slide, just a quick update that shows where this progressed in 2018. We were through a lot of work, which was led by our internal sustainability working group, which is a group that includes membership from every single team across our business, which involves people from Singapore, Australia, New Zealand, and the US. We were tasked with developing the measurement and benchmarking approach that underpins this SLI approach that we've created. So in 2018, we rolled out this updated SLI framework to all of our partners who are our property managers or our portfolio companies to help with our impact management and measurement reporting for the year. This got rolled out to 18 forestry assets who reported for their financial years that ended in 2018 and across our 18 Forest Carbon Partners projects. So you can imagine that was quite a lot of data to start getting in, 70 plus metrics across nearly 40 projects. And that's just including the ones that are captured under the end 2018 reporting, while we had newer assets that did some pilot reporting that will come into effect in the following financial years. So we're really grateful to all of our partners for working with us to get used to this new way of reporting, a new level of detail, going from what used to be around 19 to 20 metrics to more than 70. You can see on this slide the key sub-themes that were identified as part of this SLI framework. What I want to emphasize here is that we've tried to focus as much as possible on what we believe are the material ESG and impact themes that fit into each of the 6 SLI themes that we have. And if you look at those categories there, you'll find something under each of those is reported in our public report this year. When it comes to public reporting, we do have to be somewhat careful because as we are a private markets investor, we do have to manage the commercial sensitivity and competitiveness of our assets, but we're always keeping in mind the balance that we want to be transparent and accountable to stakeholders who not only include our investors, our staff, our board, but also the general public, and particularly those who are affected by the operations of our forestry investments in rural communities in the regions in which we operate. So just a few notes to say what that means for what can get reported publicly. While we're collecting data from every investment and using this to inform and monitor our investment performance and impacts, we report to clients regularly on progress towards specific ESG and impact targets at the asset and fund level. When it comes to our annual public report, we're reporting at a fund level, seeking to make that balance between disclosure, transparency, and our asset management obligations. But I hope you'll see as you read through the report that we're still able to provide quite a high degree of transparency, reporting around half of the indicators publicly in some way, mostly disaggregated to a fund level so that people can understand what each of our funds is achieving through its investment activities. Now this slide here shows you the cover of the new interactive report. This is something that we'll send out to all of you participants via email this week and which will be going up on our website. You can see it's got little buttons where you can click to jump around and they're important in different ways to learn about those areas I highlighted before: our business, our SLI, and impact management, and case studies and highlights. The next few slides, I'll just showcase what this looks like and how you can kind of navigate yourself through and explore at your own pace. For each of our investment programs, you'll see that there's an overview that shows a map of where our assets are and talks about each of our funds under management. For those of you who do have the slides in front of you, you can see on the bottom portion here, there's a couple of menus. The very bottom line is the top level menu, which then puts you into sort of the sub-chapter headings where you can jump from, say, investment programs to learning about our responsible business approach instead. And on the top right, you can see how you jump from, say, our Australia New Zealand overview to the Southeast Asia overview and onward to the United States. So here's just a similar look at what Southeast Asia looks like and what the US looks like. To highlight for you on this, each of these pages also presents highlights from 2018 in the investment programs. This is because, you know, our ESG performance does not happen in isolation. It happens in the greater context of what our investment programs are themselves doing and achieving. So that'll include things like completion of investment programs for a certain fund, achieving a certain level of forest certification for another, extending an investment to restructure an asset in Asia, for example. These types of highlights, because again, we think it's important to understand the context of the investment for the impacts to then make sense and to really have a good fit. Each of the SLI themes is explicitly addressed in the report. And when you go to the Sustainable Landscape Investment Impact Management section, you'll see the headings for those SLI themes. This page here shows you an example of what productivity looks like. One thing to highlight here, the two buttons that you see, continuous cover forestry and optimizing nutrient fertilizer, those are where you can jump to case studies that are relevant to that SLI theme. And on the top right, you see things like productivity, forest description, timber production, and R&D. That's where you jump to the sub-themes of that section. So within those sub-themes, you'll find the SLI data, or if you go to case studies, you'll find the storytelling side of that theme. This is an example on carbon and climate, which, as I mentioned earlier, is near and dear to New Forest's heart. Shows how the SLI data is presented with some key highlights. We're very proud that across our forestry assets, just in the production area alone, we've got more than 121 million tons of carbon stored. I do want to highlight that carbon and climate is definitely a focus for improving the quality of reporting going over time for New Forest. In 2019, we aim to be adding in harvested wood products for as many funds as possible, because we believe actually one of the largest impacts we make as a sustainable forestry investor is by sequestering carbon and getting it stored into long-lived wood products that actually increase those carbon pools over time. And it's not just the carbon that stays in the forest that does this, it's the carbon that goes to those good sustainable uses across global markets. We'll also be looking to bring that reporting in line with emerging guidance from things like the EU's high-level technical group on sustainable finance, and using that best practice so that our clients can then take that information from our reporting and marry it right into their own developing ESG and Task Force for Climate-Related Disclosure type analysis and reporting. This is just a second slide to show you the other half of our carbon work, which is around the offsetting. One of the impacts I'm personally proudest about at New Forest is our leadership on carbon markets in California, which Dave alluded to before. And in 2018 alone, the carbon offsets that were generated by our investments in the US were equal to taking 24,000 rail cars of coal away from the system, or the equivalent of reducing more than 500,000 gallons of gasoline consumed. You know, that's a really strong, tremendous impact, and that's just 1 year of our investments. The case studies and highlights has always been my favorite part of the sustainability report. This shows you what you'll get if you look at that section. The top level brings you to an all regions, which has some interesting case studies this year where we brought for the first time what we see as some of the key emerging trends in responsible investment. And that includes, you know, Task Force for Climate-Related Financial Disclosure and what New Forest is doing to respond to that new guidance, modern slavery and the changing regulatory landscape of that and how it relates to our investments, as well as a bit more of a deep dive on those sustainable development goals. We also have an overall case study in our enterprise risk management framework, as it's something we bring to every investment we manage. And given the rising increase of forest fire risk around the world, we've talked with leaders in each of the regions we invest to get their views on mitigating forest fire risks. And if you jump to the Australia, New Zealand, Asia, and US components, you can then see the case studies that relate to each of those regional investment programs. This is quickly an example of one of those case studies showcasing socioeconomic studies and how they relate to land use planning in Asia. And I wanted to end with a little bit of a forward-looking view of, what's next for us. So while we're very pleased and proud to have launched the new SLI reporting framework in 2018, what we're looking forward to is how we can continue to use our asset management experience in this framework to support those more innovative investment approaches that Dave also mentioned. How do we get toward that big picture natural forest infrastructure asset class? We go from something like simple carbon reporting of our Forest Carbon Partners portfolio towards scaling up our carbon forestry strategy in the US, where we're actively seeking to acquire and manage timberlands where the climate impact actually generates the investment alpha. To me, that's a very exciting impact investment advancement. It's also how we're doing things like using the social forestry models that you'll see explained in case studies from our Tropical Asia Forest Fund to now embed those in our new blended finance structure for Asia, seeing how we can focus on targeting additional livelihoods and community development impacts as an integrated part of the investment approach. Or in Australia and New Zealand, as Dave mentioned, where our investment programs are now aligning to government focuses on the expansion of that plantation base, not only just to meet rising timber demand, but because of the shared recognition that forestry is an important part of rural landscapes and communities and must be part of the response to climate change. So those are just one small example from each of the regions we invest in and how I think the SLI data, experience, case studies that we aggregate can be used to help us advance ourselves and this greater picture towards a more sustainable asset class. So with that, we've got just a few minutes left for questions, and I'm going to quickly shift over to the chat and see if we've got something in here. And I believe we've got Jos. I will unmute you to ask a question in just 1 second. Okay, go ahead, Jos. Okay, I think you can speak. Hello? I think, okay, so there's no mic there, so apologies. If you do have a second to type it in, we can try and see if we can get it. It sounds like it's a long question. Meanwhile, is there anyone else who wants to sort of raise a hand or put up a question? I might pass it to you, Dave. Do you have any questions?
No, I think it was a good presentation, MaryKate, and it's really a continuous improvement process here to try to understand what we can do to communicate better to our clients, but also to the communities in terms of what the outcomes are from our work.
Yeah, great, thank you. And thanks. We do have a couple questions coming in, which is very helpful. Thank you. The first one is, will the SDG reporting form some basis for how we approach new investments? I think that's a great question. And actually, we just had a chat with our new forest board last week about what level of SDG reporting and SLI reporting the board wants to see to measure our performance as a business. And I would say there was appetite for an ongoing focus on how we're contributing to these larger societal goals to form not only part of that board reporting, but how we look at investments. More specifically, over the next year, we'd expect to be putting in place a new standard template that goes along with our IC papers, our investment recommendations, that shows the relative SLI status of investments, and that highlights the opportunity for SLI improvements and gains to be made. So we do expect that will be factoring into the decision-making on the front end of investments. And Another question has come in here with a nice compliment, thank you, saying, I've always been impressed by what we're doing. How much time and staff resources are we committing to telling the story, compiling and presenting all of this information? That's a great question. If you ask me in the month of March, you'll get a very different answer than if you ask me in October when not much is going on. We did commit a lot of resources in that sustainability working group to the development of the new SLI framework. And part of the beauty of New Forests and our staff is that everybody in their jobs has got an alignment to the sustainability ethos of our business and to ensuring that we're delivering on our mission to invest to create productive and sustainable landscapes. So in terms of dedicated sustainability resources, we have myself as a corporate resource, and then within funds, there's kind of point folks who carry that. Particularly in Asia, we also have a full-time environmental and social manager. And in Australia, we've transitioned away from having a single ESG or stewardship manager to having someone who's filled that role previously continue to be a subject matter expert, while each of our operations staff and investments team are also undertaking that work. So it's quite ongoing in that sense. And a couple of questions, one more question here. What's the biggest challenge for the organization in ESG data collection? I would say for me, it was getting a common set of indicators and frameworks that applies across nearly 1 million hectares of assets in 6 different countries. When we think about things like, for example, water quality, you'll see in our report this year that we don't have a standard measure on something like our impact on water. And that's because the regulatory and sort of local situations vary so much, not even country to country, but state to state within those countries. So those are things that we're continuing to focus on. I think we've been quite fortunate that our business partners, our property managers, and our portfolio companies have been responsive to reporting and see the value that we're trying to bring to the asset management through it. So getting the data collected has not been as big a struggle as you might anticipate. I'll just note we're about 2 minutes over time, so I'll take this one last question and then thank everyone for joining us. The last question was, how difficult is it to measure SDG value as an increase to equity IRR? And this is something that a lot of fund managers continue to struggle with. Absolutely. I think that was the toughest question that we had from the board last week in that conversation about sustainability reporting to them and where we're going. It's absolutely one of our goals to try and use this SLI framework and our ESG and impact measurement to benchmark our performance, and then in turn to use that benchmarking and measurement to help to quantify the added value that we get from better sustainable management of forests and land. I would say that we're not naive enough to think that we're going to get a simple answer to that anytime soon, but we do think that we will see the benefits of risk reduction, preparation for new market opportunities, the ability to engage in new strategies because of the ESG management or because of things like ecosystem services coming into pricing. So I'd say that's one to stay tuned on, and we're always happy to discuss with peers and fund management or asset owners about what ways they see that working and developing in the future. So with that, I think it's been a very full hour, and I hope that we've given everyone a good taste of why and how we're reporting and what that means and look like. I will just say, please go to our website and check out the PDF of the report, which is live now, and I'll be sending around this version of the interactive one for you this week to explore at your own pace. I hope that you enjoy both the data and the case study highlights, and welcome any feedback by follow-up email or separate calls, particularly with clients. If you'd like to give us your thoughts on how this meets your needs and what else you'd like to see, let us know and we'll set something up. So thanks very much.
Thank you all.
Take care.